Boom! What's up, Waves Capital? It's Royce Jacob. Welcome back to the channel. And in this video, we are going to be talking about how big tech has fallen following a very bloody week of Q3 earnings reports. Or, to reference the analogy we've been using, the generals have finally been, well. So, I know this sounds dark, and the markets are objectively in a very bad place at the time of recording this video, but I do want the focus of this video to be on the positives and talk about the opportunity that's present following these tech titans falling from grace, okay? As we've been saying, again, to reference the analogy, the war is not over until the generals are shot. Apple, Amazon, Google, Meta, or Facebook, and Microsoft all fell from grace very significantly this week. So, this is bad, once again, but I believe it's a good sign of the macro bottom. At this point, the markets are pricing in what seems to me to be the worst case scenario, because the markets and investors are incredibly good and incredibly efficient at pricing in foreseeable headwinds. Therefore, I do think that the bottom is a lot closer than it's not. And if it was my guess, I think the bottom is coming. Maybe even tomorrow we see the macro bottom. So I want to talk to you guys about why that is. I want to talk to you about where I'm seeing opportunity in this market once again. Hint, hint, small caps. I did reference that in the title. So I do want to talk to you guys about why I'm excited about small caps over mega caps, even though they've all fallen so hard this week, and really where I'm putting my money to work. So let's get into it, you guys. We'll quickly go over the rundown of the video, and then we'll dive into each individual tab as we go forward. So to kick it off, we do have today's two earnings in front of us, Amazon and Apple. Very, very volatile sessions in after hours trading. I want to talk to you guys about the immediate reaction to this, and also to the reaction as after hours trading progressed, because I think that does give us some indication as to what price action we'll see tomorrow. Many of you guys may be watching this, so you'll know if I'm correct or not, because I'm talking about Friday, October 28th. We'll see if the markets can make somewhat of a comeback, because we did see a very visceral reaction right off the bat. Following these earnings reports. Even Apple is a great example, down as much as 5% at one point. But at the time of recording, which is later in the afternoon, we're in the green. Not much, but we're in the green, and that's really a testament to the fact that, the earnings shock, the negative earnings shock, I should say, is behind us. And investors are kind of focusing on the growth moving forward now that this Q3, all of the fear and doubt that was confirmed in these Q3 reports is now behind us. So really not much else to say here, to be honest. Just want to show you guys that. But before we dive into the charts, because I do want to take a look at, we'll take a look at three charts. I was going to just do the S&P 500 and ARK, but we'll take a look at Bitcoin at the very end. So I do want to focus though on the S&P 500, which is pretty much just the US equity market summed up in a single chart. But I do want to talk about ARK Innovation ETF as well, because as I've said a lot in the newsletter, and that's the reason we've looked at it a bunch in the newsletter lately, is because ARK Innovation is the single chart that best sums up small caps in general, small caps, small to mid caps, I should say, and hyper growth stocks. Obviously, given the composition of that ETF, which is just a basket of curated stocks. Okay, so we'll take a look at the SPY, we'll take a look at ARK, and then we'll just close it out with a little Bitcoin bonus. But before we do that, I do want to read through, this is actually yesterday's newsletter. This is a trade alert newsletter, but I included a lot of macro talk in here and just going over my general market thesis and what's going on in the markets right now, because there is a very exciting dynamic playing out of small caps outperforming large caps. And if you guys have been following along for a while, if you guys have been part of Waves Cap for any meaningful amount of time, you would know that this has been something we've been calling for I would say probably like at least the past 6 months, as small caps have been getting significantly more beaten down than large caps, okay? And ultimately, capital will flow from overinflated large caps into overbeaten small caps, and that's just kind of been that general thesis. So let's read over this guy, and then we'll just jump straight into the charts, and I'll talk to you guys about how I'm feeling about the macro. I do want to talk to you guys about the Fed meeting as well, but really focus on ARK and just talk to you about some of the small caps talk to you about why I'm excited about small caps in general. But if you want to know exactly what I'm excited about as far as ticker symbols or companies, stocks are concerned, just watch the last video I posted because I go over each of them. Or I go over, I think, 8 of them in that video, 8 stocks that I'm excited about. So that said, let's dive into reading. So it's somewhat of a strange environment in the markets. I'm going to try to alter this for the present tense. That said, it's a good day in the portfolio. That's all that really matters here at Waves Cap. It's rare to see the Russell 2000 small cap index in the green while the S&P 500 and NASDAQ mega cap indices are in the red. But at the same time, it's also a narrative that we've been calling for a long time, once again. So as you can see here, Russell 2000 again. Russell 2K is a small cap index. And this was yesterday, but the markets looked almost exactly like this today as well, which is very promising in terms of the trend actually persisting. And it's not just being kind of not being a curveball, but actually a paradigm shift, okay? And that's a word, that's kind of a buzzword that you'll hear a lot over the course of your investing or trading career is paradigm shift. But I've seen a few of these paradigm shifts in the past, and I do think that this is a short to medium term paradigm shift that will have some stickiness. And by that, I mean small caps outperforming large caps, So small caps and growth stocks have been hit significantly harder than mega caps and legacy stocks over the course of this 2022 correction or crash. Invested capital will always want to find a home somewhere, and at this moment in time, small caps are cheap relative to large caps. So the chart I included here is the Wilshire large and small cap indices. Okay, the similar thing is for the S&P. If you use the S&P large cap, small cap, this is just the first chart I stumbled upon, but once again, it's pretty much the same thing. So the point of this is large caps versus small caps and even micro caps. You can see that as the market capitalization of the stocks go down, the greater the correction that they've seen. Okay, so where we're at now, even relative to these 2020 or like the 2020 highs prior to the COVID crashes, large caps were still inflated relative to small caps, okay? So ARK is a great example of that. I'll just go here right now. We can jump back to the S&P. You guys can see here, if we zoom out, that ARK has recently double bottomed. And again, we'll dive deeper into this as we get into the charts. But ARK has found a lot of support off those COVID lows. But the fact that ARK has retested, again, this is small to mid cap, hyper growth focused ETF, or again, just basket of stocks. The fact that this reverted significantly below its 2020 high, which was $60, to its COVID crash black swan lows is absolutely insane. And if we see the same thing at the SPY, again, just zoom out in the SPY, we're still well above those 2021 highs. So you can see here that the SPY is, and again, these are very, very different companies that constitute these ETFs, of course. So it makes sense that the SPY is higher, but the SPY is still 75% above the COVID lows, while ARK is retesting those COVID lows and really bouncing on the floor that is those COVID lows. So that just puts into perspective, and even better, it actually gives even more perspective over this into how oversold growth stocks were relative to, hyper growth stocks were relative to kind of just standard, some growth, but mostly legacy stocks that the SPY or S&P 500 is composed of. So yesterday's Q3 reports out of Alphabet and Microsoft shedding light on the fact that the Titans haven't seen enough pain yet. Our Apple equals last standing general analogy is an example of this. And the final flush we've been calling for looks to be upon us. But it's amazing and validating and lucrative to see some of our favorite small caps holding up, because in my mind, this is a good indication that macro investor sentiment is shifting in favor of this thesis. And again, this thesis being that small caps are going to consume capital, are going to consume the capital that has been built up on the sidelines by retail investors, more so by institutions and hedge funds, because the amount of capital on the sidelines is greater than it's been in, I think at least a decade. So there's a lot of capital waiting to be deployed right now. It seems pretty evident to me, and I think this will become more as evident as we progress through Q3 small cap earnings season, that these companies were overinflated in late 2021 and in these previous rallies, did get way overinflated, went way too high, but they hit the opposite end of that spectrum as well, and they fell too hard beyond the point of rationale. And I think this upcoming Q3 earnings season for small caps once again, and hit SoFi, what I'm really excited about right now, November 1st, and a few other names that, of course, if you're part of the newsletter portfolio group, you would know about. But I do think that will shed light on how oversold many of these companies have gotten, and I'm really excited to use some of the profits from the puts that we've had this week in the Waves Cap portfolio to do some damn work over the coming weeks. Okay, so if you guys want to join Waves Capital for real, if you want to join the winning team, then check out the first link in the description box down below. That'll take you to this page. Of course, from here you go to this guy, and from here you can choose any of the pricing plans that suit you. You guys, this in terms of the returns that we produce over the years, but just over this past month is extremely cheap. And I take a lot of pride in that. I do put a lot of work into this, but I want it to be accessible. I want it to be available for you guys and not something not a crazy price point, because I know times, I mean, even for myself, are significantly harder than they were over the past 6 months or so. But give it a shot, you guys. You can even try. I recently added the free trial option, so you guys can give it a shot for free. If you don't like it, just unsubscribe. But put a lot of work into this, and if I wasn't proud of it, I wouldn't be plugging it, and if I didn't think it'd do you good, I wouldn't be recommending it at all. Okay, so first link down below. Once again, appreciate it if you check it out. If not, your loss. Let's get into the charts. Okay, so again, we'll kick it off with the SPY, and there is a lot of people, including myself, who still believe that the SPY needs to retest this 340 level and kind of this long-term line of both support and resistance, a sign line right here, which do coincide. Where is this? Where do these perfectly intersect? December of this year, which is entirely possible. Okay, it's entirely possible that this is just another higher low, in another lower high. Another lower high in this overall series of downtrends. Again, high, low, lower high, lower low, lower high, lower low, lower high, onto a lower low, which again would take us down to 340. But again, you guys, it's difficult to believe that kind of the worst, especially after this week, if the SPY is still holding up this well after Google, after like Meta, Facebook, Amazon just falling 20% each, Google and Microsoft falling 5% each. I mean, Apple is really holding up well, because it is acting as a safe haven, which, you know, that's just the name of the game. It makes sense that if everything else is just absolutely melting, Apple is the largest publicly traded company in the world, will consume some of that capital. But I do think it's more likely than not that we have found the bottom, because again, the market is hyper efficient at pricing in foreseeable headwinds. These earnings reports and guidance, which is really what investors trade on, or what institutions and educated investors trade on during the reports. It doesn't matter what your previous quarter's numbers were, really, unless you're like a hyper growth company, just for validation's sake. But it matters what your guidance is. It matters what you're going to do in Q4. It matters what you're going to do in Q1 of 2024 or 2023. I'm sorry. So that's what matters right now. I think the majority of what will go wrong is priced in, because the sentiment has just been very, very bearish lately. So I do think it's possible that the bottom is actually in, that this low we saw back here earlier this month at around 350 was the bottom. That's pretty close to that high. So, you know, a lot of game theories played. And I do think that, again, given the fact that the generals have been shot, the generals have been taken out, which was my personal indication of what was going to happen and what would be my signal and indicator of a macro bottom where I would actually get bullish again. That's really my point here, is I think the macro bottom's in. If not, I don't think we're going to go much lower. I actually don't think it's likely that we reach 340, given the fact that we haven't done it already and sentiment could not be darker. Of course, the S&P 500 is not like the NASDAQ, which is all tech weighted, which is really big tech weighted. But still, the fact that the S&P is holding up well, the fact that, I mean, it's great that 401ks, all our parents' 401ks are holding up well. And I think the bottom is in terms of price targets for the S&P. I think that the Fed meeting on the 2nd, especially following a lot of this bloody price action, will bring some closure to the markets. I do think the Fed is going to address inflation, because inflation is still hot, but it's for sure getting cooler based upon a lot of second and third order metrics that gauge inflation prior to the actual CPI data coming out. So I think the Fed meeting is going to bring closure. I think the Fed likes to see the markets seeing a bit more pain and being a bit more, put in place. And I do think that this Fed meeting on the 2nd of November will probably bring upside to the markets. Maybe we see a bit more downside again. Maybe we retest this green line right here, previous resistance as new support. So bounce down, maybe another percent or two, but ultimately I do think the Fed meeting on the 2nd will bring closure, and I do think that ultimately we'll come out to retest this broken line of support here on this massive kind of pennant wedge formation that was broken, and really we saw a sell-off once that was broken. So I do think this previous support will come into play as new resistance, and I think the SPY could see, could reclaim the 410 region by mid-November. So that's SPY. Let's take a look at ARK, and then we'll close it out with good old BTC. ARK, as you can see here again, this red line right here, this thick red line, is the COVID lows. ARK has proved that this is a significant floor, which makes perfect sense. Again, right? Solid floor, COVID floor. Obvious that we're going to bounce here, but we didn't just bounce off this, which is and this is what's very, very, this is very reaffirming, confirming of a bottom, is the double bottom off of a strong floor. Okay, so we bounced once, saw a nice bounce from 33 to $38. So saw that bounce, came back down, but did not go lower than this. Okay, so this double bottom signals a break, and of course the break of resistance right here, just the general trend line. This double bottom along with a break of short-term resistance signals a reversal of trend, okay, a macro reversal, meaning the trend has been broken in the short term, and it's likely that we do go on to test some more medium to longer term trend lines. My next target for ARK, and again, this is just a good sign for growth stocks, small caps, mid caps in general, is the fact, my target, I'm sorry, is going to be this trend line right here. Dating all the way back to March, late March, boom, touch point. Next touch point right here, confirming this trend line. I do think that ARK comes up at least another, 8-9%. And I do think this happens over the coming week. I do think ARK can see another 9% of upside over the coming week. And again, because ARK is a great indicator of small caps and mid caps, I think that the majority of the sector will see that. And once again, the Russell 2000 acting the way it has been, which is a small cap index, seeing green and even outperforming the Dow is a great sign that small caps have the momentum and they have favor right now. And that is where investors want to put, that's where they want to put capital, because they're beginning to understand that it's oversold, especially because the mega caps, because the titans of the tech industry are really showing that they were a bit overvalued still. Okay, so that's ARK. Let's talk about BTC again. If you want to know what small caps I'm excited about right now, just watch the last video. But BTC, worst case scenario for Bitcoin is to come down, retest broken resistance as a new support. This green line right here, absolute worst case. But I mean, long-term resistance has been broken. You guys just zoom out right here. Super significant line of resistance was broken. We've already closed a daily, probably going to close a weekly above this. Touch point here, touch point right here. Macro resistance. Whoa, macro resistance. I think that Bitcoin, any downside we see is an opportunity to capitalize, because ultimately I think that Bitcoin will, and I've said this in the newsletter too, I do think I'd put the odds at 90% that Bitcoin sees this prior low from May, this prior low, and probably this range from like $26,500 to about $28,000. I think Bitcoin is going to reach this range or achieve this range before it sees any new 2022 lows. And I think, honestly, again, mean reversion, $18,000. That's lower than the 2017 all-time high. I do think Bitcoin has reverted to its mean. It's been holding up very well. And ultimately, I think Bitcoin is on its way to at least 26.5. So when, of course, is the question. I have no idea when this is. Will it happen by the end of the year? I don't know. But I don't think any parabolic price action is coming. I will say that. I think this is going to be a slow grind. But I do think the bottom is in for Bitcoin. And, of course, it's exciting news for Riot. Render has been performing well. I want to make a video about Render soon. And yeah, I think we'll just call it there. So I appreciate you guys watching this video. Please let me know in the comments down below what you're excited about right now. Do you think the bottom's in? Did you have puts on deck, or have you been deploying some profits from those puts into any calls? And yeah, I look forward to seeing you downstairs, and I look forward to seeing you tomorrow morning in the newsletter family. So till then, always remember, take action, make waves. Peace, team.